Have you ever heard the old saying that there is a place for everything and everything in its place? There is no industry where that saying is more appropriate than accounting. Every single transaction that occurs in the life of a business is written down in a special book called a journal. The journal is also known as the Book of Original Entry. The entries made in the journal are appropriately named journal entries. Transactions are recorded in chronological order and always have both a debit and a credit line. Why two lines for every one transaction? Because the form of accounting used most often in the accounting industry is called double entry accounting. Double entry accounting requires that for every one transaction that occurs in a business, there are at least two accounts affected. One account is debited and one account is credited. A debit is an entry on the left side of an account, while a credit is an entry on the right side of an account. Why are journal entries important? Since journal entries involve at least two accounts, that means at least two accounts have a change in their balances. When account balances change, then so do the overall finances of the business. Let's look at an example. Joe is a mechanic. On February 1st, he bought a new alternator to repair a car in his shop. The cost of the alternator was $249. This is a business transaction that needs to be journalized. The journal entry will look like this. Notice the form of the journal entry. The date is always listed first, followed on the same line by the name of the account that is debited and the amount of the debit. On the line underneath this, the name of the account that is credited is listed, along with the amount of the credit. The credit line is always indented below the debit line. The third line of the journal entry is a brief description of the transaction. Once each transaction has been journalized in the journal, the entries are posted or transferred to the general ledger. The general ledger is the listing of all transactions of a company that are itemized by the specific account. The general ledger is also known as the Book of Final Entry. At the end of an accounting period, after all the journal entries have been made, accounting professionals create what is called a trial balance. A trial balance is a list of all the accounts of a business and their balances. Since each business account falls into one of three major categories, asset, liability, or owner's equity, they each have what is called a normal balance. Asset accounts are those accounts that are related